bet on the India growth story or time to stay cautious? Let's try to understand that. We are being joined by Daljeet Kohli, Head Equity at Roha Asset Managers LLP. Hi Daljeet, very good afternoon and thank you so much for your time. Markets at a very interesting juncture. There is geopolitical uncertainty around, but on the other side, we also have our internal triggers. Yes, case in point being that GST rate rationalization that we all are waiting by to help the growth of Indian economy. But how much of it, Daljeet, do you believe it's already in the price? How much of the worries and how much of the excitement do you believe is already digested by the markets?
Good afternoon. Thanks for having me on your show. You see, we believe that India consumption story is here to stay, and India growth story is going to stay for a very, very long time. These hiccups are just temporary hiccups. Of course, whenever there is so much of geopolitical noise, so many things happening all across the world, obviously it will have impact on the market, and that will lead to a lot of volatility. But volatility is the thing that we have to live with. So in equity markets, we have now learned all this, that volatility will always be there. The big picture or the long-term story, I think, remains intact. We are quite bullish on the consumption story as such. We have already, just as a disclosure in our consumption-related stories. So this GST cut, I think, is going to be a good game changer, especially for domestic consumption. So if you see for last 3-4 years, there was two problems which India was facing. One was on the urban side, too much of inflation. That over the last 1.5 years has subsided to a very large extent. It is no more an issue now. RBI has also explained in their various meetings that now it is not too much of a problem. Along with that, there is a rate cut cycle which has started. So if you see by historical evidences, whenever the rate cut cycle starts, equity markets tend to behave much better and they always perform much faster. Second is on the rural side. So rural also for last 3-4 years was going through a bad patch, sometimes erratic monsoon, sometimes dispersion of monsoon not in a very conducive manner. But in last 1.5 years, if we see, government has dispersed a lot of money in rural area with all these largely BAM Yojana and other Yojanas. So a lot of money has gone there. And incidentally, this time the monsoon has been very good. So all their stress has also reduced a lot. So which means that for both the engines, the rural as well as urban consumption, both are now poised for the right time to grow. So that will mean that, and if this is aided with the ease on the pocket through GST cuts, and if we are seeing maybe all across 5 to 7%, 10% kind of saving there, that will definitely start a new cycle of consumption. So we are quite hopeful. And only thing that we are looking now is that one, there should not be some devil in the details when these announcements are made and how fast these are made. They are very important.
That's right. Daljeet, hi, good afternoon. Mansi, this side. Volatility is there and it is here to stay. Okay. But then it's not the tariff imposition which is hurting the sentiment of the market. It is the uncertainty. Like you rightly said, volatility. Having said so, at present, we are at a juncture where the markets literally are losing and surrendering to all of the important levels. It was 24,800, then we went down from 24,700 and now even lesser than 24,600. If you think this is the time, or maybe, for the market participants who are listening to you through our medium and who has a capital and are willing to park it somewhere, where do you think they should consider? I hear you when you say that consumption is a piece which you are quite confident about. But other than that also, how should one diversify the portfolio?
Right. So see, first thing is that these kind of turmoils or these kind of uncertainties only create opportunities for long-term investors. So if you have that clarity in mind, then you can deploy at any point of time. You don't have to wait for one particular day or one particular time period when you will invest. So as an investment philosophy, You have to continue investing and continue evolving as and when these opportunities come. And assuming that these are temporary problems. So once we are very clear that these are temporary issues, we have identified consumption as one big beneficiary of that. Second beneficiary would be the sectors that are exempted or that are not part of tariffs. No, for example, pharma, for example, agrochemicals. No, those are the things which will not be subjected to the tariffs, or the impact of tariff will be much lesser because companies will be able to pass it on. So, for example, if we are talking of a generic pharma company, it is working on 10% margin. No way it can absorb 15%, 50%, 25%, whatever percent you want to put as tariff on it. It has to be passed on. And the guys who are buying this product, they also understand that this company with the ultimately this burden has to be taken up by us. Same way in if you are a CDMO player, then there is no problem because then your cost of the CDMO is only 2% or 5% of the total product. So then even if you put 20% tariff or 50% tariff, it won't make a difference. So you have to go sector by sector. You have to go company by company who's able to withstand this problem. And because of this overall mayhem, if the market has disproportionately punished something, that will give you an opportunity. And that is where you will buy, but it will look like as a contra call as of now, but it
Yes.
will do very
Well, indeed, we do take note of that, Diljit, and totally respect your view. But hold on to that all. Lots more to discuss. But on the other side, because for now, it's time to slip into a very short break. But before we do that, viewers, we spoke